Hey guys, John Paulamy here, Actionable Intelligence. Today's Saturday, June 15th, 2019, and it's the weekly market report. So earlier this week, like a couple days ago, I put out a short video called Office Hours by the Pool, and I was answering some readers' questions, specific questions around how I mucked up the last didn't take full advantage of the last uranium bull market and what I learned out of that, and also offshore drilling, specifically to ENSCO, whether I still liked it. So I want to expand on that a little bit this week. And one of the things that was important, that a concept I learned, I had to spend a lot of time on, and what I find I get a lot of questions on, and I think a lot of you guys struggle with, is when to sell. You get into these situations where, let's go back to my situation in the last uranium bull market. I was able to get on the momentum train, riding the wave, even though, as you know from my previous video about it, I really didn't have the knowledge base to really understand what was going on in the uranium market at that time. But I was riding the wave and getting on the momentum trade. So one of the things that's hard for people to do is determine when to sell. And it's hard for me to just, I've thought a lot about this and contemplated how to answer this. And here's the deal on this, guys. Everybody's different in every way. You're on your own investing / speculating journey. You are who you are. You have to look into the mirror and see who you are. You have to understand how much risk you can take. You have to understand how much experience you have, what your knowledge base is for that particular sector that you're invested in or speculating in. Are you an investor or a speculator? A lot of these things that we're talking about in these videos and in my newsletter are very highly speculative, things that we're doing. They're not necessarily buy and hold investments. They're not sometimes for the average person. I've said this before. Most people don't have the constitution emotionally. It's not a bad thing. I don't say this to cut people down or criticize. Most people just simply don't have the constitution to ride through some of these things and to do, to have conviction and then hold through, these big volatility swings that happen in a lot of these speculations. And you have to look in the mirror and see if you can do that. I have fully advised people, everybody I know that ever asked me, for 99.9% of the people out there, I keep saying this, is that the average person doesn't have any business owning individual stocks. They should just, like I've said before, they should just get a tax-advantaged account, i.e. a 401k or an IRA, and they should just put $288 a month in there or whatever they're comfortable with, the same amount every paycheck for 40 years, and let compounding and low fees, take their account up over time. I have said many times that the average investor underperforms the market. And the reason this is just because of what I said: lack of experience, lack of emotional control, buying at the top, selling at the bottom, these type of things. So everybody's different. Now, I know I don't know each person out there. You might have the constitution, experience, and ability, and have been successful doing this, and you can do it. It's not a criticism. I'm just saying as a caveat. Now, I know people want to be involved in the markets. They want to boost their yield. So, a thing that I've kind of stolen, another piece of advice I stole from Meb Faber, who I really respect and has talked about this a lot, is, okay, fine. Put the majority of your capital into long-term theme of just investing over time and let compounding do its work through all the ups and downs, and don't touch it for 40 years. Take off 5 or 10% of your capital, whatever you're comfortable with, and use that as your speculative account, which you will use for investing or speculating in individual situations. That way, the majority of your capital is, not at high risk. I mean, what we're talking about here, when we're talking about uranium, shipping, speculating on these countries turning around, they get bombed out like Cyprus or Greece or whatever, Russia. These are very high risk with the potential for high return, but you can lose a lot of money, and there's an extreme amount of volatility involved. And there's a lot of speculation. What you're trying to say is that the current information that's in the market that has this security beaten down is wrong, and people are looking at it wrong. That the majority of people have it wrong. That's what you're saying. And that you have a view because of your research that puts you in the minority, and that you think that this catalyst that you think is going to change the sentiment is going to happen and bring the crowd to you. Now that takes a lot of work and takes a lot of experience and takes a lot of gumption, and everybody doesn't have that. So I want to keep reiterating that, because this is not easy. It's easy to identify the industries. It's easy to identify things that are beaten down. It's difficult to say, okay, this is why I think shipping stocks are cheap, and they're selling at 60 to 70% discounts to net asset value. The market says that that's priced correctly because of the trade war with China and, the economy slowing down worldwide. But yet, my understanding of shipping is that it has nothing to do with the economy per se. It's more about the supply of ships, and that IMO 2020 and the lack of investment in new shipping and the scrapping of old ships is going to lead to a supply shortage, and that's going to raise rates. That's what you're saying. Or you're saying the same thing in uranium. You're saying that the market has it wrong, that the market says that there's an oversupply. It's going to go on for a long time. You have industry, people in utilities and people at UXC and consulting and places like this saying, there's plenty of uranium, and that's why it's $25 a pound spot. And what we're saying is no, the research shows that reactors are growing, demand is growing, and I can see 3 to 5 years in the future, and we're looking at a massive shortage. So these are very risky things to do. You are basically swimming against the tide, but this is how, if you're correct, how you can get these asymmetric, hundreds and 1,000% returns. So be advised, it's easy to identify the situations, but it's hard to do the work to contemplate and then have the emotional capital to, watch these things. You think they're cheap, and then they get even cheaper, and yet you hold your thesis. So these are the things you need to consider before you get involved. And then, for me to just say, well, this is what you should do to sell, I can't do that because I don't know what your mentality is. I don't know, what your emotional constitution is. So what I always do is I let valuation and sentiment guide me. So I'll give you an example of a recent, I've talked about this before in a previous video, one of my first videos, which was kind of crappy. I did it on Zoom, but it had a lot of pauses. But I talked about the Bitcoin mania back in December of, I think it was 2007, whatever the mania was, 2017 or 18. The mania in, I think it was 2017. Maybe it was last December. I can't remember. Anyways, whenever it went to $20,000 a Bitcoin. Now, I was buying Bitcoin because I saw the mania starting to develop. I started seeing some interest. I had a view on it, and I was buying Bitcoin at, $200, $300, $400 a Bitcoin, $600 a Bitcoin. Then I got involved in some mining, so I was mining Bitcoin. It was very profitable for me. And then it started shooting up. And I'm not going to lie, guys, I got out of it way before. I got out of like 3,000, selling Bitcoin at 3,000, 3,500, 4,000, something like that. I think I sold out the last of my Bitcoin at like $6,000. And it proceeded to go up, double and almost double again. Now, I don't cry about having, 300-400% profits, but I could have had even more profit. But the problem was the sentiment was so out of whack. You had every moron and nitwit and schlub, and, that's your cue. That's when I'm talking about sentiment. When you've got your, ex-brother-in-law that you meet up at a friend's party, and he's telling you about, buying Bitcoin at 20,000, and this guy's never been right about anything ever, that should be your barometer. You should be saying, look, this dink or this coworker that's always coming up with fly-by-night schemes is telling you, hey, I want to, did you see that Uber came out with an IPO? I'm jumping in. You run the other way. You've got to develop some of these sentiment tools, and these are, kind of anecdotal, but I have a couple people that I use as reverse barometers. And, I remember somebody called me and they said, listen, we have this investment group and we would like you to get on this conference call with us. And, we're really excited about Bitcoin. This is when it was like $15,000 a Bitcoin. It was in its going through its blow off top. And of course, this investment club of, average people that had no business being anywhere near this stuff, that's when they decided they wanted to get involved. And I got on there and I told them over an hour why they shouldn't get involved in Bitcoin. And they just did not want to hear it. And that to me was telling me, I'm glad I sold out of this thing. That's what I'm talking about, sediment. When things, you will know when sediment gets too far bullish, when you say, this is getting crazy, I'm out of here. I mean, we saw the same thing. I remember a sediment indicator in 2008 when oil, or right 2007, right before the crash, oil was like at $130 or $40 a barrel, something crazy like that. And even Nancy Pelosi got on TV and was talking about, well, we may need to consider removing some of the drilling bans for offshore California. That's when you're at the top. When you see things like that, when you see Gordon Brown, when he was the chancellor of the exchange in the UK and was selling the UK's gold at $250 an ounce, you knew that was the bottom. So what I'm trying to tell you is you really got to pay attention to sediment. And, the government and schlubs that in your life. I'm not being critical of these people, but, they don't know what they're doing. And they always get involved in these things at either the extreme top or they get so burnt out that they sell at the bottom. So this is the kind of things you need to be looking for, and let valuation guide you. Guys, there's a reason why all of these so-called unicorns are coming public now. We're at the top of a market. We're at the end of a 10-year bull market, and we're seeing Uber, Lyft, Beyond Meat, all these companies that have got these huge valuations. They're not bringing them public for the average investor's benefit. They're bringing them public so that the founders and the venture capitalists that took these things from zero to their high valuation so they can cash out. You're having smart money sell to the dumb money. We see it at every market top. And am I saying that we're near a top in the stock market? We very well could be. And these are some of the indications that you should be looking for. This is a sediment indicator. When you were an initial Series A investor in Uber when valuation was $10 million and the valuation is $60 billion, you can darn sure say you want to get some of your money out of that. And who are you going to sell to? Well, retail and the schlubs, you take it public. So retail investors are always buying at the top and always selling at the bottom. So use these kind of clues for your indication of when you should be selling. You're not going to catch the exact top, so don't worry about that. If you catch the majority of a move, listen, people, I've pointed this out before. Let's be realistic about this. This is part of the problem. People don't set proper expectations, for returns. And I think a lot of that is from the hype in the newsletter business and in the investment advisement business, a lot of shady stuff going on. You can make hundreds of percent, thousands of percent, or they see, people that became billionaires from Bitcoin and this stuff. I can do that too. Listen, the greatest investors of all time, like Warren Buffett and Prem Watsa and these kind of people, you're talking about averaging 16, 17% returns per year every year. 16 to 17%. The average return for the S&P with dividends reinvested is like 8 to 9%. That's averaging in all of the gains and all the losses over all the years with dividends reinvested. So if you get a stock that goes up 100 or 200%, you're doing pretty darn good. You shouldn't sneeze at it, but I've seen people sneeze at it. Man, I was only up 150% on that, and then I sold. I could have made another, 50%. Come on, guys. You have to set realistic expectations, and that's part of knowing when to sell. It's like, okay, well, I've had companies go up 300-400% in a year and a half or 2 years, okay? And I take some off the table because they're very speculative type situations, and, I'm not going to catch the exact top. No one can. So I kind of use valuation and sediment indicators as clues of when I should be selling. Now, I can tell you that there are some people that advise, sell half a position after a double. That makes sense because then you're getting your initial capital off the table Say that you're into something for like $5,000. It doubles, it goes to 10 grand. You pull your initial funds off, now you're even, and you let the remaining uh, the remaining 5,000 ride. And then maybe if it doubles again, you take another half down. These are some rules you can put into place. But like I said, they're all individual to you as an individual. I can't tell you what to do. I can't tell you what will work for you because I don't know you. I don't know how your mind works. I don't know how your stomach works. If something that you think is going up, like uranium, we all think it's going up, and yet some of the stocks go down. Are you laying at bed at 1 o'clock in the morning staring at the ceiling and your stomach is in knots? Well, mine isn't. I sleep fine because I'm confident and have conviction in the position. I know that in the short term, the market is a voting machine. In the long term, it's a weighing machine. It's the same thing with these offshore stocks that I'm going to talk about later. So it just depends. You have to really be self-introspective, and that's why this isn't for most people. That's why most people should just put $288 a month into a Vanguard S&P fund and just put the same amount in for 40 years and they'll do fine. But people want to, try to do better, and you really need to take this into consideration when you're doing this, because if you're not prepared emotionally and you can't control your emotions and you're going to get upset, you're going to chew your fingernails down and, well, what should I do? This is supposed to go up, but it's not doing what I think it should do. You can't, this is exactly what the markets do. They try to throw off people. You have to look at it as businesses. What is this business that I'm buying a portion of? Does it make sense? Do I have confidence that this business is going to get better over time? Is it going to recover? What are the catalysts? Write them down. Has anything changed? I mean, if you were buying rental properties and you bought an apartment building and it was returning you 10% a year, and then, you had the opportunity to buy the adjoining apartment building for 50% off and nothing's changed in the rental market, wouldn't you do it? I mean, you have to look at everything individually, and you have to really write these things down and really contemplate and think about things. Okay? Why am I investing in this? Why am I putting my money into this? What are the reasons that this beaten down country, this beaten down stock, this beaten down asset class is going to move higher? Okay, and then if the reasons change, I'll give you a quite easy example in uranium. I have full confidence that there's been insufficient investment to supply the nuclear reactors over the next 5 to 10 years. It's going to be, I think, overshoot on the upside. However, if tomorrow we were to have another Chernobyl or another Fukushima, and then more countries said, that's it, we're done with this, you would have to change your thinking. And I guarantee you that if you woke up the next morning after the news, a lot of these companies are going to be down by 50 to 90%. That's just how it's going to be. So, like I said, are you the kind of person that if you have conviction in a position, you've done your research, but yet you still you're drinking Maalox and chewing on Tums all the time because the stock you bought's down 50%, but the business is improving or has prospects for improving? Then this isn't for you. It's just that simple. Don't be afraid to take a loss if the reason for investing in a stock or industry or a country changes. Okay? I'm kind of bullish on Greece right now, just like I was bullish in Cyprus when it went through its conflagration. And the reason I'm bullish on Greece is that it looks like there's going to be an election that's going to be a catalyst to get a more business orientated government in place, or a perceived at least. And I've done this before. I've rinsed and repeat. I've done this in Brazil when Bolsonaro got involved. I've done this in Argentina when Macri got involved. It doesn't really matter if they actually make changes. It's a market perception. Same thing I did in Pakistan and in Egypt. Okay, you can't go in there and just change everything, these governments, but there's an initial perception and capital flows in, and you can get a 50, 60, 100% gain. Okay, I've done this multiple times. So that's the perception. If, in fact, New Democracy didn't win the election and the socialist government stayed in power, then you would have to change your view. I mean, that's what I'm talking about. So if you write down your views and your reasoning doesn't come to fruition or changes, then you have to sell the stock. And if it's at a loss, you have to take the loss. And you have to be emotionally prepared to do that. Well, John, you're telling me that something that's down 75% and the reason change for buying it, I should sell it? Yeah, that's what I'm telling you. You have to be able to do that. Position sizing. you shouldn't be taking huge positions in these things that are going to keep you awake at night. These are very speculative ideas we're talking about, and you should be putting, 1 to 3% of your capital into these things and no more. If you've got 50% of your capital in uranium stocks and you're not prepared to ride through a 50 to 75% decline in the stocks, I mean, you are really setting yourself up for, a nervous breakdown. So, this is the things I'm trying to warn you guys about. In the end, my advice is to do what allows you to sleep at night and keeps you from excessive worry. Know a lot of people, I converse with a lot of people, and I get a lot of people calling me or sending me emails saying, this is down and I did this and, I'm really worried about it. If you're that worried about it, then sell the position down to a point where you're not worried, or sell the position out and get your health and your mental welfare is worth more than sitting around worrying about a position that you took that is going against you. I mean, that's really my advice. And I gave this a lot of thought because, a lot of people struggle with this whole, when do I sell? Even if I've got a gain or I've got huge losses and I see no prospect of this turning around, they get like a deer in the headlights. So I hope this was helpful. That's the best advice I can give. Okay, let's talk about the collapse in offshore drilling stocks. I mean, this is awful. Here's Ensco basically down by more than half in a month and a half. And okay, here's Rig, Transocean, RIG's a symbol, same thing. It's down by almost half in the same time frame. And it's like, okay, why is this happening? You said that the offshore drilling market was undervalued and it's going to turn around and this is a depleting industry. This is all still in effect. Nothing's really changed. Only thing I can tell you is that you can see that there's a lot of volume, especially back in Ensco. You can see in this area, people have really there's a selling climax going on. People have been selling. You can see the increased volume. Somebody's been selling out. People have just been saying, that's it, I'm done. I think the world economy is going into a lot of people think the world economy is going into a recession. Oil demand is going to go down. That's going to transfer to lower cash flows. The whole sequence of events. And then, these companies have no prospects. They're still over capacity in the industry. They're all in debt. And, it doesn't really matter anyways because we're going to electric cars and oil is in its death throes and it's on its way out. Okay. I think that's, I've hit all the reasons why oil or why people have this perception. So if there's no reason to use oil anymore, why would we drill for more oil? That seems to be the perception. And not only that, shale is continuing to grow. I'm not going to go into refuting all of these things. I don't believe in any of that. Shale has $360 billion in debt that needs to roll. I think maybe a handful of these companies are even cash flow positive. The money is drying up. The production is not going, we're not going to be producing, I don't think. I mean, anything's possible now. I don't think we're going to go to 15, 20 million barrels a day out of the Permian or out of the U.S. I mean, I just don't see it. I just don't think the capital is there to do that. So, is oil going away? I don't know. I've traveled the world. I said this in the video the other day. I've been to a lot of third world and second world countries. People can't afford, $50,000, $60,000, $70,000 battery cars. There's no charging infrastructure. I mean, do I think electrification is going to encroach? And yeah, it probably will. I think what's more likely is hydrogen is going to make some encroachment. I just think that, it's not what people think it is. And, you still haven't solved the problem of air travel, shipping, trains, these type of things. So, I remember going into Chicago as a major. I just spent a whole year in the Chicago metro area working on a project, and it's basically a transportation hub. I used to drive each way 40 to 50 miles west of Chicago on State Road 30, and there's a railroad track along there. It's doubled in many areas, and it's constant BNSF traffic, constant tanker cars taking oil to the refinery in Whiting, constant container traffic, intermodal. I mean, I would see at least on my 40-minute drive, at least 3 to 4 trains going each way. I mean, this is all going to be done with batteries? I don't know. I mean, these are on tight schedules. It's easier just to pump 5,000 gallons of diesel in there and take off. So I just don't see it. But, we'll see. How to explain this? I think people are just puking these things up. I mean, what can I say? I mean, something that's down, 50% or 90% can keep going down. It's just what happens. What I like to do is just look at the business, though, itself. Is the business improving? Is my view being validated by actual facts on the ground? And yes, it is. I mean, here we have a situation where, on Friday, after we're puking up everything last week, Ensco's market cap is, you can buy the company, well, theoretically, for $1.3 billion. And if you go to Basso Offshore, which does all the gathering of data for offshore industry as far as utilization, what day rates, you can get real-time news and reports on what's going on. That's where I get a lot of my data. Am I saying they're infallible? No, but that's the best information that I can get. They're saying the fleet value of Ensco is anywhere between $7.5 and $8.5 billion. So the value of the rigs is between $7 and $8 billion, and you can buy the whole company lock, stock, and barrel for $1.3 billion. Do they have debt? Yes, they have a lot of debt, but a lot of it is, pushed out to 2023, 24, and extended out there. They have plenty of cash on hand to stay in business for the next several years. I'm not worried about bankruptcy, but that's how this thing's being priced. Rig is in the same position. Transocean, major player. Market cap is $3.3 billion, and the value by, valuation that Basso puts on the fleet is $9.4 to $10 billion. So if you had $3 billion, if you had $4 billion, if you had, let's say, $5 billion, you could buy, conceivably $20 billion in value. And if you look at the industry, we've seen recent conferences, we've seen recent comments, we've seen recent results from the offshore drillers that are telling us that the industry is turning around. Why is it turning around? Because these things go through cycles. This is the worst offshore drilling recession that has ever happened. Okay? It's recovering at a slower than anticipated rate because there's overcapacity. There's a lot of cold stacked and warm stacked rigs. A lot of those rigs are not going to come back in service because they are old, and to bring them back in service would cost a lot of money. They're going to get scrapped. So over time, as utilization of existing rigs keeps going up, and it is starting to go up, it has been going up, as we start depleting putting all these rigs back to work, the supply of rigs that are able to work goes down, and the price for the day rate starts going up. The pricing power starts coming back to the drillers. So I think we're seeing that. If you look at the Basso Offshore May jackup report, for example, it says jackup fixture activity is surging, utilization at 75% and rising. They also add in their comments that day rates don't seem to be following, but that's what you expect. When you see day rates get up around, or you see utilization get up around 80%, we should start seeing day rates creep up. Okay, if you go look at the floater report, when I'm talking about floater, I'm talking about the semi-submersibles rigs. Activity's picking up, but even it's acknowledged that it's slower than people thought, but it is improving. And this is what you expect to see. As the offshore, as the major oil companies start putting their foot back in and start trying to put money to work and develop resources to replace their produced resources, of course they're going to go into the shallower water first because it's cheaper. The projects are shorter term. They're cheaper. That's why you're seeing the jackup rig market coming back first. That's exactly what we expect to see. We're going to dip our toes back into this. We're not going to go nuts with some 10-year offshore Nigeria $10 billion project. We're going to start, hey, we're going to do some recompletions in shallow water. We have this property over here that's in the shallow water. We can develop it for less money, turn our capital quicker, and as confidence continues to build and as their cash flows are maintained. Remember, oil companies are in the oil production business. That's what they do. They're going to continue to produce oil. It's an extractive industry. They have to replace what they produce or they go out of business. They haven't been replacing what they've produced. At some point, this is a problem. So we keep reiterating this. I know the stocks have went down. I mean, am I worried about it? No, the businesses are improving. I mean, I can't predict when people in the market are going to, change their view towards this. So I'm watching this. I feel good about it. I'm not, I wish that every time I make a recommendation, it immediately turns and goes up, but that's just not how it is. So I just want to bring the facts on the ground. This is an example of what I'm talking about. The businesses are actually improving, and yet the stocks are collapsing. So what the stock market's basically telling you is that, we're either going to have a global recession that's going to so impact the oil price that these companies are going to go out of business, or the fact that the other argument would be that oil's going away and this is a dying industry. I had the conversation. You can go look at several coal companies that are doing just fine right now. I mean, Peabody, I use as an example. Go look at Peabody. They're one of the survivors. Coal markets overseas are doing fine, and they're minting money. There's an Australian company too. I think it's called Source or Signal 32. I can't remember. It's an spin-off of BHP. Same thing. They're buying shares back. Their met coal production's going up. They're cash flowing nicely. So, I mean, when you say an industry, even if an industry is dying, there's always going to be the strong that come out of it and are going to be able to do well in that environment, because I don't think oil's going away. And I just don't share this view that everybody else, that the majority thinks that, where are you going to get the cobalt and lithium? I mean, it's a math problem. You're talking about increasing the production of these minerals by, hundreds of percent. And where are these things located, like cobalt? The majority of it comes from the Democratic Republic of Congo. I mean, let's get serious here, guys. And, people that are in Bangladesh or Bolivia or Myanmar, or the majority of the people are in India, as they become wealthier, they're going to buy scooters first, then small cars. And there's just no infrastructure in these places for, massive adoption of electric cars. The lights don't even stay on most of the time, all the time. So you're going to start plugging all these cars in. I mean, people don't think these things through. So that's my view. Again, appreciate the support. Hope you get something out of these videos. If you do, you can support me in many ways. Just follow me on YouTube, hit the bell, hit the likes. It all helps out. Leave comments. That all helps out. And we definitely like hearing from you guys and engaging with you in the comments section. I'm not always right, but I think that I always have high conviction and believe what I say. So I really appreciate a lot of the comments and a lot of the congratulations. People give me a lot of, they feel like they get some value out of this stuff. So I try to speak plain. I try not to BS people. I'm just one man, and these are my views. But definitely enjoying doing this. Another thing, follow me on Twitter. You get a lot of benefit, I think, even if you're a lurker on there, because I'm really engaging with a lot of smart people on there, especially around the uranium market. And if you are interested in uranium, you really need to get on Twitter and be following a lot of these people that are a lot smarter than me and are really, really engaged full time in following that market. So that's it for this week, guys. Appreciate it, and we'll talk to you next week.